Okay, we're back. StreamYard. Sorry about that. So let's go to the charts and the positions real quick. So this is the S&P 500 for 2 minutes. I'll go to the positions real quick, and then we'll listen to the Fed decision. I put on a whole lot of positions on AAOI, Applied Optoelectronics. They're expiring Friday. Sold a whole bunch of put credit spreads, and this morning I turned them into iron condors and sold a whole bunch of call credit spreads. So turning it into iron condors, they're going to melt away. My strikes are pretty far. Stock is 94. I'm at 85, 82, 83, 80, and 8 and 70. 875 put credit spreads. So those are hitting the wall already. But then we're going to take every penny out of those. Long 1,500 shares of AD&T. As I said, I will post these positions on the community page of the YouTube channel today after the close. I started selling some put credit spreads, buying some call debit spreads at 58 to 60 cent debit on AG. I think oil is topping, so I have to watch it closely. I have a position in oil. I've had a position in USO actually going back, gosh, I don't know, about 2 weeks now, maybe 10 days. And it is selling off now, but I'm short an iron condor on USO, 120, 125 call credit spreads, and 80.75 put credit spreads. So those are zero already. But call credit spreads still have a whole bunch of stuff because we're right at it. We're at 119.21, although this morning we're up to 122, so kind of sweating a little bit, but we'll see. Keep fingers crossed. On these things, it's pretty normal that you watch until the last minute. But, that's where the BMNU, I have 5,000 shares. I'm going to get called away, hopefully. Fingers crossed. I have the $2 call sold against it. I have a ZSL position that went through a reverse split. That didn't matter really. So that looks like I may get called away. So this account's going to look pretty clean actually on Monday. And last but not least, I have a put credit spread on 2x ETF of Alibaba. And that's where we are. So I have AAOI expiring. I have BMNU expiring. I have TSLL expiring. Those are kind of, that's a 2x ETF. I have a put credit spread on that. I'm about even on that, so we'll see where that goes. USO is the key one. I'm at 120, 125 CCS. Much better than in the morning. We're at 119.08. I want to short actually Exxon, Phillips 66, Valero, Chevron, BP. Not short physically, but probably put out a whole bunch of call credit spreads. Just be short call credit spreads. In fact, I may just do that. Those are ones. They're $2 or better. I will definitely start putting them on. I like doing call credit spreads. I don't like naked strangles in this type of volatile marketplace. So define risk. Yes, you can still lose money, by the way. A lot of people like, oh, you can't lose money. I'm like, no, you can lose money. Even with a call credit spread. It's kind of semi-directional. Yeah, $2 credit. Let's go for like 205 credit. These are April's. Let's see if we can get them off at 205. And we'll add to it. Okay, order is in. Okay, we'll see. We shall see what's going to happen. So let's go to the front. It's XOM. Yeah, so I'm trying to short 160.65 call credit spreads there. Everything is behaving, honestly. It's just not too bad. But let's see what this is. Powell's last hooray as a chairman, Fed chairman. He's out of there. So actually, if we do get a pop here, 205, 210, 210. Let's see. Yeah, 205. Let's go to 210 in case we get a pop in oil. So what's it called? Credit spread. You sell the closer to the money strike, you buy the next strike up. So 160.65, I'm risking 5. I'm taking in 2. Stock is 158.72, so 159 range. So most I can lose is 5, but I'm taking in 210, so most I can lose is 290 if the stock is at 165 at expiration, which is April, which is 30 days to go. So I don't mind doing these because I think oil, even if oil hangs out here, I think these have rallied a little bit too much for my liking, especially as these mega caps too. So I do like it. Technically, it's okay. Same thing with Chevron. Refiners are going crazy. Valero and Phillips 66. I'm not touching those yet, but I will. I mean, shorting it. And yeah, those I'm not going to touch. Exxon is the first one I'm doing. BP, no, I'm just walking up the upper band. Not going to touch that one either. So here's the SPX. We got 8 minutes to the Fed decision. Let's go to the big charts. So this is SPX daily. MACD under 0. We're on a sell. We've been on a sell. We're kind of rolling over, 20 EMA crossed to 50 to the downside. Next support is 200 EMA at exactly 6,600 on SPX. After that, we're at 6,500. I mean, there is support, but then it's kind of teetering, actually, to be honest with you all. SPX has not gone anywhere because Mag 7 hasn't gone anywhere. So none of the Mag 7 they're all actually looking sickly. Apple right on 200 EMA. Best looking one is Google. That's hanging in there like a champ. Microsoft and Meta, and Microsoft just looks sickly. Amazon looks sickly. It's okay, but nothing. I mean, they're all under their 200 EMA. There's a reason for all that. Meta, and yeah, they're not the best looking charts. They're not the worst looking charts. Tesla's just hanging at the 200 EMA. I don't know. Tesla, it feels like to me we're going to have a pretty solid $100 move coming up, or usual Tesla $60 to $80 move coming up in the next month or so. And so for my long-term port, I'm long 5 stocks. I'm long Netflix at 83. I'm long Lulu at 182. Yeah, actually earnings came out. That's green today. I'm long Google with cover calls going out to May at 152. I'm long UPS at 96. I had a really nice profit. I didn't take it. We're almost back to even. I'm long UPS at 96. With the oil pullback, with the oil rally, obviously UPS is getting hurt, although FedEx is not as much. So look at the difference. Same group, different worlds, right? So let's go to SPX. Let's go to the 2-minute chart and let's see. I mean, we're just kind of sold off. We're just kind of leveling out here for the day. Let me have my 0 DTEs ready. They're super high. You can't take a directional when IV is this high, but right after the decision, IV is going to get crushed. So be careful taking directional bets on this one. If I'm going to do anything, I'm going to look at the 6700s today. I don't trade, day trade, but yeah, they're like IV up to 40 now. No chance. Yeah, those things are going to get crushed. Just can't sell them either because it's really tough to sell these things too. So let's look at, all right. Let's go to CNBC, my first time in months. Honestly, don't pay attention to CNBC at all. And no reason for me to pay attention to CNBC. But then on Fed decision days and things like that, I kind of turn it on and listen to it. They're currently in a commercial break. So while they're doing that, let's take a look at GEV on request. And usually Fed decision days, you get a little bit of volatility after the decision, and then nothing much happens. Lovely. Did you ask me about GEV? Beautiful. You wouldn't even know market's having a correction. Higher highs, higher lows. Yeah, this is GE's hot division after the split. GE also has a healthcare division. This is GE8C, I think. I'm pretty sure. Yeah, GE Healthcare. They're looking sickly.
And welcome to Power Lunch.
Welcome to Power Lunch.
This afternoon, who is in for Ryan Sullivan, as we are just about 4 minutes away from the Federal Reserve's decision, its next move on interest rates. The odds of a rate cut are less than 1%. The market is basically.
Well, we know that, Kelly, although I like you a lot.
The path of future cuts will certainly be in focus, and it's Chair Powell's penultimate press conference as head of the Fed. Ahead of it, here's how your money and markets are setting up. Scores on the doors, maybe they would call this. The Dow is down 442. The S&P is down 42. The Nasdaq's down 138. And the small caps are down 15. Bond yields, the last check was about 422 on the 10-year and 371 down on the 2-year.
All right, of course, the big mover, Kelly, these days has to be in the oil markets right now. U.S. benchmark, West Texas Intermediate, WTI prices, you can see $96.52. It's up 1/3 of 1%, by the way, and that is way off the session highs at this point.
Thank God.
World benchmark Brent crude went as high as $109.
Oh, we're down to 118 now. Come on now. Let's get paid.
July of 2022, both are up roughly 50% since the conflict in Iran began. So keep an eye on those.
I'm going to do those X sounds.
By the way, fractionally today, just about 1/4 of 1%, trading just below that psychologically important 100 level. The greenback strengthening against major currency pairs, up 2% in the month of March. And the latest read on the AI trade, by the way, let's go microeconomic here. Micron reports quarterly results after the closing bell. Shares
that's going to be big.
Just today,
probably as important as anything else.
350% in the last year.
Let's do those X sounds at $2.
Memory prices higher. So this is
why we mentioned that. The Micron, if you had to go,
we'll add to it.
Only Micron or only Micron would be up there.
It would be, because it would set the narrative. We kind of know what to not expect or what to expect around Iran. Yeah. We do not yet know if that AI trade still has legs, and if Micron tells that tale, it could be big. Well, let's get right to the all-star panel we have assembled.
All-star panel.
Kelly points out, are just minutes away from that Fed decision. Joining us now, David
Kelly. Yeah, we did those at $2. Short call credit spread.
Innovator Capital, ETFs, and Sarah Malik of Nuveen. Thank you all.
Let's get paid.
Question right now first for David, because I'm staring right across the table at you.
Yeah, we got add to AG.
Should it do something?
If AAOI stays between 85 and 110, I'm going to be okay.
Where we are right now, I think there's a lot of uncertainty. I think what Jay Powell's going to talk about is uncertainty of both sides of their mandate. The thing that I'm going to be looking at mostly is what do they think inflation is going to be like this year? Because they're going to have to put some number down there. We're going to get their economic forecast.
Ooh, that's going to be interesting.
They actually raise that from 2.4% at the end of the year, which is what they thought back in December, given what's going on with oil prices.
Jim, the commentary is key. So many people have already said it on our air today. People all over Wall Street are saying it. What kind of commentary would you be looking for?
So for me, I'm going to focus.
Jay Powell will probably say, F you, Trump. Raise the rate.
Ultimately, where's the tipping point? Does this tip into from an inflation shock into a growth shock?
It's a 2-minute chart of SPX, folks.
So I'm going to be really focused on.
So if we take out 66.88, 66.89, I think we're going to pop. But I don't think much is going to happen.
But some of the other ones around the macroeconomic story in the U.S. here are.
Come on, oil. Just sell off. If oil sells off, I'm not sure if the market's going to rip, but I think we'll put on a short-term bottom here. All right. Here is the decision.
In their summary of economic projections, I'll be watching for whether they're going to upgrade their view on inflation, downgrade their view on the economy, given that fourth quarter GDP came in sub 1%, and
here today, and slower economic growth this year. Tomorrow, we can still get 1 or 2 rate cuts into the books later this year.
All right, here comes the algos.
86% chance.
First, they'll probably pop it, and then they'll sell it off, and we'll be back to where we started. There it is. There's the candle up.
But I don't know if we can show this in the next 5 seconds. Kalshi's odds for the next Fed hike, 60% before 2028, 37 before 27. Steve Leisman has the decision. I see.
Unchanged. Federal Reserve leaving interest rates unchanged in the range of 3.5 to 3.75. It was an 11-1 vote with Fed Governor Steve Myron again dissenting, preferring to cut rates by 1/4 point. The Fed saying very high in its statement today that the implications of developments in the Middle East for the U.S. economy are uncertain. But other than that, pretty robust or actually positive economic outlook. It continues to say, as it did last time, that the economy or the economic activity is moving at a solid pace. Say job gains have been low, but the unemployment rate is little changed. Now, as for the outlook,
If they don't move it, IV's going to get crushed any second now.
Beneficial, bringing the rates down to 3.4, and one cut for next year, another additional cut for next year at 3.1%. The long run.
Well, White House is going to own the Fed after May anyway, so I don't think the Fed is going to make any difference. I think they're losing their independence totally.
That's from 2.4 the December forecast. Going back down to 2.2% in 2027. On core
2.2%. What the fuck are you guys dreaming? What inflation is 2.2%? Wow, not much is moving, man. Interesting. Let's see how they crushed it, IV.
7 officials want to hold, 12 want to cut, at least 1 cut or more. 5 of those want 2 cuts or more. The old range, guys, was a funds rate from, you pick all 19. The bottom was 2.1. The top was 3.9.
Yep.
Come in a little tighter. Now it's 2.
Down to 32 from 38.
A little bit of give on the dovish side, a little bit of give on the hawkish side, and now you have a little bit more centered around this 2.6 to 3.6 area. But again, the Federal Reserve emphasizing uncertainty. Interestingly, I would.
That'll be down to 20 in about 10 minutes.
But also, they upped their GDP forecast, so that's kind of telling you perhaps where the center of the board is on the ultimate impact of the oil price shock, guys.
All right, Steve, stick around here, please, because we're markets that are relatively stable right now, maybe not unexpected. We're all waiting for the press conference. Let's get up to Chicago for the reaction in the bond markets right now. Rick Santelli has that story, Rick.
Yes, Dom, if we look at all the intraday moves, 2s, 10s, and dollar index, what jumps out at me right off the bat is that the fixed income markets, 2s, 10s, the whole curve, we started to see yields drop even before anything was ready.
All right, let's see what crypto's doing. Metals didn't do much. Nothing has moved, actually. There's much less movement than I expected. Crypto tried to rally. We're back to square one. There's your IBIT, which is the ETF of Bitcoin. There's your Ethereum. Not much going on there either. Just still going sideways. I mean, we got into resistance a couple days ago, 50 MA. Now, not much. Pull back today. So
really what we're seeing here is the 2-year yields seem most sensitive to the notion that we're not going to potentially get any more rate cuts, but that didn't change today. That's been the way it's been moving, flattening the yield.
Nothing going on. This is the least amount of movement after a Fed decision, honestly. So I guess we're balanced, but we'll see. The day is young, folks. We got 2 hours to go. Let's see what they did to those 6700s. Yep, down to 32. Yeah.
Listen, the conflict is an awful thing from a humanity standpoint. From the market standpoint, especially Treasury, it's been mostly well behaved.
Perfect. AOI 95. Stay here for a couple more days, or at least a day anyway.
Higher yield close than pre-conflict, and of course the dollar index. I'm not sure it's a flight to safety. I think it's more a function of the ECB. We're talking about our.
Oh yeah, USO. Come on now.
most likely they're going to be looking at aggressive tightening because the energy situation outside of the U.S., whether Europe or Asia,
shorted the call credit spreads on XOM.
potential inflation and central bank.
I think that's going to be a good trade, actually. I got to add to those. I got to be more aggressive. Maybe I'll do like 155, 160s.
This is almost the most unchanged I've seen a pair of statements. The January to March one had virtually no change whatsoever, despite saying the situation in the Middle East.
Very quiet.
Well, yeah, because the uncertainty is on both sides. I mean,
In fact, the USO's really sold off hard last like 15 minutes, and SPX is not rallying, which is kind of surprising to me.
I think both numbers are now too high.
Because that correlation is 100% there. It's been there for 2 weeks.
In Iran, I think we're going to have to in the course of a few weeks.
Yep. Come on now.
And I think inflation by the end of this year will be below 2.7.
I like AGCO quite a bit. A lot, actually. I like all those industrials, actually. Deere, AGCO. AGCO is the cheapest one. You know, stock is down from 144 down to 114 at 200 EMA. I would like to sell some put credit spreads there for April. For example, 115, 110s. The market makers just made all the bids and ask like weird, wild. 225 credit. I don't think we can get those off, but I will try to sell it. Let's see if we can get it. Nope.
Does it matter? I mean, I'm sort of like, if we're just
Of course
ignoring
not.
all of this because there are downside
Because
risks
those
to the
bids
economy,
and asks are so wild.
I'm struggling to kind of bring this all together.
So the way I look at this is, what's the read through to asset prices? So the question I asked before the meeting was, what's the Fed's view on an inflation shock versus a growth shock?
Hmm.
The Fed
200
is
EMA is about 112, so
what
no
they're
rush.
telling you is that this is a price shock right now, but it doesn't necessarily translate into a valuation shock because growth is still based on what they're saying. And now, why did they say that? Is it because we had?
I agree with that, actually. But if it lasts more than a couple, 3 months, it's going to be a different kind of shock. All right, I had enough of CNBC. We'll go back when Powell is yakking.
That they're telling you that valuations are going to be okay as long as growth stays relatively stable.
Valuations are high, sir. But who the fuck are you? I don't even know. All right. Non-event, man. Yeah, it's okay. Oil rallies a little bit. I don't mind. SPX 2 minute. Nothing going on, man. Wow, this is wild. Usually you get like a 1% move up or down real quick and nothing happened. I mean, not 1%, like close to about quarter of 1%. Nothing. Let's see how they're killing those options now. Looking at the 6,700, we're at 66.75. So if you look at the down to 460. Wow, holy shit. I'm getting killed. It's okay. Don't have a position there. Don't care. Actually, it better be this market's quiet. My puts and calls expire worthless. Okay. Alrighty, let's go to the front, answer some questions if there's any questions. DT, don't quit. Hello, goodbye. No questions. Okay. Okay. Yeah, we're definitely going to add to AG. Everything else is just not doing anything. Hopefully I get called away on BMNU. Hopefully I get called away on ZSL. I got a couple of days to go. XOM, I'll add if we do rally. Gosh, USO closes here. It's going to be wonderful. And Iron Condor is just going to hit the wall. This morning I was pretty close to rolling it. The call credit spread at least. I was like, nah, let's give it a little bit of time. Give it patience. There's too much extrinsic value, although I was in the money by $1.50. I was like, yeah, we've seen this movie before. Let's just be patient. Actually, that position is just about to start printing, which is good. It hasn't printed for like 10 days. I mean, usually those things, you don't expect it to go to the last minute when you do an iron condor. You want, I want it to stay between 120 and 80. And when I did it, it was at 100. I didn't even dream of it's going to get to 120, 125. And the premiums were super high, obviously, because IV is so high on USO. It's the right thing to do. And then we're just testing the upper end. And I'm like, okay. But again, right, it's defined risk trade. It's not naked. I know I'm not going to get blown out. I know size is correct. So it's just another trade, man. What else is there? I will definitely add to XLM call credit spreads. It's very quiet, folks. This is ridiculous how quiet things are. This is fine. It's all good. Quiet's better. If you're selling options, quiet's good. Quiet is good, for sure. Yeah, just in a big cloud of dust, nothing happens. JPAL will come back in probably at 11:30ish. Maybe we'll listen to him a little bit. I think he's going to say something nasty to Trump, but then he's getting sued. So, poor guy. After Fed chair for 8 years, he's been called every name in the book. So I was talking about that I think Fed is going to lose its independence once Jay Powell is gone with the new Fed chair. Whatever White House wants is what the Fed is going to do, although there's 12 governors, so they may not agree with it, but then the governors are going to get appointed too now. So interest rate policy or fiscal policy is garbage. So monetary policy follows a broken fiscal policy that we have. Broken fiscal policy is we're about to have 39 trillion in national debt. Doesn't matter what administration there is, we have, it's just going to be the same. We're just going to keep printing and inflating. And with this oil shock, I don't know if inflation is really going to come back. This bond market's kind of saying so. And Fed cannot move the bond market, by the way. They can move the short end of the curve. They cannot do anything about the long end of the curve. And there's so much debt around the globe that it's going to be all interesting. At least USO is behaving. I mean, I like it. Yeah, AG, I'm definitely going to add to that position. Patience, folks. XOM, I'm definitely going to add to you. Yeah. And I had to put credit spread on DOCN. 52.5, 57.5. It's 86 now. Holy shit. I mean, it's gone parabolic. Oh my God. Insanity. Yeah, this is what stocks do, man. Imagine if you had a naked strangle on this thing. No. Although I will do a risk reversal on this and short this thing. This thing is definitely going to go back to 70, 65, 70. But you don't mess with momentum. You got to wait until momentum kind of kills itself. But this one, I'll definitely do a risk reversal trade. So you can do risk reversal by selling puts, buying calls. And then this one, you can sell calls and buy puts. I'll do it through call credit spreads, though. I cannot sell naked calls on this thing. This can go to 100 tomorrow. But I'm sure premiums are decent enough to start doing something, maybe at some point. Not yet. No, 77 IV? No, I don't think so. So, in 90.95, well, stock is 86. It could be 90 at the end of the day. 9,500 call credit spreads. $1.25. Nope. I ain't risking 5 for $1.25. I mean, yeah. 90.95s. 225. I mean, my rule of thumb is if I can take half 50% of the wing, that's the way to do it. If you're not, then what kind of puts do we buy though? This puts are prices are skewed to the put side for sure. Call side 72, put side 92. Yeah. So expectation is just going to have a correction, but from where? We don't know. But that's insane. Look at that thing. Holy shit. If you own that stock, you wouldn't know market selling. I'm looking at FIGR, by the way, Figure Technology. I do like it quite a bit. Actually, it's right where I'm kind of get my feet wet on this one. And let's see if SPX is doing anything now. Oh, big leg down. Big leg down. Okay. See if they hold it. Oh, did J Powell say something? Oh, crude rally. Okay. Well. Okay. Okay. All right, let's see. Mm-hmm. 66, 67. 6,700s are 285, almost at the low today. Do we want to gamble? I think if oil stays here, they may just short cover at the end of the day, but not until Friday. And Friday is right away. Biggest OPEX coming up for this year at the moment. Quarterly OPEX. So weird things happen at OPEX, so be careful. Yeah, big leg down, big leg up. Okay, well, let's not mess with that yet. All I want is USO under 120 by Friday. The rest is going to handle itself. Yeah. Yeah, we'll definitely add to Exxon. I'm really being so patient with AGCO to put a position on. I really do want it. Okay. Okay, we're up to $2 now on the put credit spread. Give me another like 30 cents. Then buy the 120 calls. Sell the 130, 77-cent credit. We're at 114, just about there. Not yet. It's just patience of God. Now you can say, why didn't you short it, Sergio? Good question. I mean, this stock has done a round trip. It's definitely oil related, obviously. Earnings were really good. 185 expected estimate, 217 quarter before, 126 estimate, 135 quarter before, 105, 135. So stock has earnings, obviously. They do farming equipment, smaller version of Deere, which is green today already, but that is already at the 50 EMA pullback. That pullback from 675 all the way down to 570. ACO actually has done worse because it's kind of smallish cap. D is expensive compared to ACO. So patience. Come on, get me down to 200 EMA. Because I'm just doing it right in this band right here. So I'll start with put credit spreads and then we'll see what happens for April. Yeah. J-Pat talking yet? Or Q&A? Oh, we're going back to the lows. Let's see. Let's see if J-Pat's talking.
So first of all, in the private credit markets, that industry has evolved from fewer players to a whole lot of new players coming in. So this is part of the life cycle of an asset class over time. As more players have come in, they've had to go for lower deals, get into areas like the software. So you do need to be aware and know what you own in private credit. If you own, if you're invested in areas where there's healthy exposure to software, given the AI risk, you could run into issues with that. But that's not I don't think it's a painted brush across all of private credit, because when you look at the sector as a whole, it's still fairly stable and high quality. Second, turning to equities, why have equities actually performed so well or not as bad as we thought they would during this geopolitical crisis? What we've seen is the typical buying the dip. So many flows, over 100 billion about a week ago, coming in to the market from retail, target date, or others. And why are they doing that? Two reasons.
When does JPOW come? 11:30? 11:30. JPOW's at 11:30, I think. All right, let's answer some questions. Hello there. Hey, Sergio. It's Sergio, but it's okay. USO and XOM trade are similar in terms of direction. Not really. USO trade was Iron Condor, so with a wide range. Why not wait until XOM just in case oil rips higher within the next week as war escalates before placing the trade? Well, I'm trying to take advantage of the higher IV because you want to be a seller of options. Number one, this is not a directional bet for me. When I put on an Iron Condor, you just want kind of, your short strikes, the price to stay between your short strikes, right? It's, there you have a point that kind of a similar. If I'm just only short call credit spreads, then yeah, I'm directional also, obviously. But looking at where Exxon came from, Exxon is not a small company, folks, right? Looking where that has come from, I think it's proper. And again, do it at the right size, right? Do it at the right size. I'm looking at the chart, the daily chart. So oil, this right here, could be considered a continuation pattern, but I'm also looking at some of the technicals, which are weakening, which is MACD. We're making higher highs on the stock. MACD is nowhere near higher highs, so that's kind of giving me an indication that I can start layering the position in. But then you will press when it starts going your direction. This is, again, call credit, being short call credit spreads is not purely directional. It could go sideways, it could go down a little bit, and even if it rips, you know what your max loss is. So there's a point to what you're saying. But watching USO, having traded commodities, the backwardation is something very important for me, right? So September crude was selling at about 80, while the spot crude contract, which is the March crude contract, was at 100. So there's a reason for backwardation. And I am not bearish on ExxonMobil, obviously, but I also don't think ExxonMobil should trade like a internet stock, right? So we are kind of, to me, it looks like we keep retesting, making new highs, and every time we do make a new high, we have a correction, So kind of playing for the correction. Mean reversion trade, 50 EMA is way too, ExxonMobil doesn't get away too far from 50 EMA, 20 EMA. So there's a bunch of technical indicators that I'm kind of looking at to see where I can start a position. Well, I didn't start it here, right? I didn't start it at 147, 148. I'm doing it at 160. And the probabilities of, and I'm not guessing a top, by the way. I'm just kind of going for sideways to kind of lower. And if it does rip, what's my remedy? Okay, sell up a credit spread to go with it, right? I could do that now, but I'll just leg into an Iron Condor. If we do get a pullback, we'll put out probably 145, 140. And then at that point, I'll be 145, 140 put credit spread, and 160, 165 call credit spread. That'll be the Iron Condor. And but I will leg in. But first, I'll put the top end. And then, so hopefully I answered your question. I think I did. Yeah, we're not doing much. J-Pow's coming, I think, at 11:30. Yeah, the daily looks ugly, man. Oogly. Yeah, we're on the lows of the day. It's the 2-minute. I watch a 2-minute, 1 day, 10-minute, 10-day. It's we're in the middle of nowhere. Honestly, we should retest 6,600 one more time, which is going to be the 200 EMA. Everybody's expecting it to hold. Watch them not hold. Then I watch a 30-day, 60-minute chart. 6,600 is support. We're in the middle of nowhere here. So there have been rallies, these ripper rallies, as you guys know. That's why I kind of pay attention to 0DTs once in a while, because those things move. They move fast. If you do catch a good one, even do like a call debit spread or something, way out of the money. In fact, we did one. When was it? Like I think it was last Wednesday, Tuesday, when the market ripped. Paid like $1.10 for it. They went to $10. They went to max. And I'm like, okay, cool. I'm also, there's a lot that I want to do, but I want to be patient. Let the dust settle. For example, I really do like the precious metals stocks. I don't think silver and gold are over. I honestly don't think they are, just in a wide trading range. And that's why I kind of started nibbling on AG, and I'll add to AG if we get down to 65 on SLV. This is the wide trading range. And these companies are going to print money because they're fully hedged and their out of the ground costs are so low on gold and silver. Not as much on the base metals or industrial metals like copper and aluminum, but they look good. Look at AA, right? No pullback. It's Alcoa. This is Freeport-McMoRan, largest copper producer in the world. Like ERO copper, it's pulling back into the levels that I could be interested in, 200 EMA there. But I do like ACO a little bit more, just a little, maybe a couple more points. And then I'll start layering the position in. Yeah, USO 119. We'll just hopefully, if we can close it red, I think we're going to be okay. Yeah, when I did it at 100, I did not honestly expect it to be tested the top end. The bottom end was the right price. The top end I thought was the right price, but when we got to 124, I was like, shit. Again, though, it's what defined risk trades. A lot of people sell puts, naked puts, right? Cash secured puts cannot hurt you. I mean, you guys are a bunch of morons on X, bro. They're a bunch of morons. Cash secured puts can't hurt you. Really? You think so? Okay. All right, let's go look at a hood. Okay, yeah, the cash secured put on hood at 125. Oh, and then went to 100. Oh, I went to 85. Oh, now it's 75. I'm like, how does cash secured put not hurt you? And then yesterday, there was a report on SoFi. All the defenders came out. I'm sure whoever shorted it, I think it was Muddy Waters. They probably covered. Retail was like regurgitating the stock because they paid 35 for it. The stock is 17.5, down 50%, with the market down 3%, 2% from all-time highs. For some reason, people are just groupies on these stocks. And they're the same old stocks. And NVIDIA has been sideways forever. They're groupies of these stocks. It's just they don't think there's other stocks that exist. I have like 300 stocks on my watch list. None of them are those ex-Furu stocks. They're into Palantir and this. Bro, there's 10,000 stocks. Rotate. Why don't you go buy some Exxon when oil was ripping? They're not traders. I swear to God. I don't know what they do. That's not trading. I don't know what they do. Trading is trading. You just buy, you sell, you're right, you're wrong, you're done. And then they go sell 2-year out options and shit. And I'm going like, what's the point of that? Data decay is not going to be there. If you're a seller of an option, why would you go out 2 years? They go like, in 2 years, the world can come to an end. They don't understand. They just go, oh, there's so much money. Yeah, there's a reason for that. The buyer of that is thinking completely opposite of what you're doing, by the way. Because, in the bull market of the last 3 years, they're all like, oh, I sell puts, I make money. I'm like, yeah, because it's in a bull market kind of a situation here. Well, we're not there now. How are you guys doing? Well, underneath the surface, stocks are going down 50% with no news, like Hood and SoFi and HIMS and things like that. And they're all talking about the same stocks. Same. They've been talking about the same stocks forever. It's the whole fucking X crowd. Ah, there's J Powell. Let's see what he's going to say.
And I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
Okay.
The U.S. economy has been expanding at a solid pace.
Okay.
While job gains have remained low, the unemployment rate has been little changed in recent months, and inflation remains somewhat elevated.
Okay.
Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals.
Okay.
The implications of developments in the Middle East for the U.S. economy are uncertain.
Okay.
We will remain attentive to risks to both sides of our dual mandate. And I'll have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak.
Mm-hmm.
In our summary of economic projections, the median participant projects that real GDP will rise 2.4% this year and 2.3% next year, somewhat stronger than projected in December. In the labor market, the unemployment rate was
White House will like
4.4%
that.
in February and has changed little since late last summer. Job gains have remained low. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force
Mm-hmm.
due to lower immigration and labor force participation, though labor demand has clearly softened as well.
Mm-hmm.
Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. In our SEP, the median projection of the unemployment rate is 4.4% at the end of this year and edges down thereafter.
Okay.
Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.8% over the 12 months ending in February,
Mm-hmm.
and that excluding the volatile food and energy categories, core PCE prices rose 3.0%.
Mm-hmm.
These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs.
Okay.
Near-term measures of inflation expectations have risen in recent weeks, likely reflecting the substantial rise in oil prices caused by the supply disruptions in the Middle East. Most measures of longer-term
plugging down now.
are consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 2.7% and 2.2% next year, a bit higher than projected in December. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. From last September through December, we lowered our policy rate 0.75 percentage point, bringing it within a range of plausible estimates of neutral.
And how much rates have gone down?
Of our policy stance
Not at all.
should continue to help stabilize the labor market.
Here's the rates. TLT. September is when we started cutting the rates, folks. Last September. Right here. Right here. It's the first cut. 91 TLT. Today, 87 TLT. This is the long end of the curve. Fed has cut the rates how many times now? 6, 7 times? And how much have the rates gone down on auto loans, mortgages? Not much.
Based on the incoming data, evolving outlook, and the balance of risks.
Okay.
In our SEP, FOMC participants wrote down their individual assessments.
They're going to make me watch this all the way to the end, aren't they? Yes, they are.
Each participant judges to be the most likely scenario.
Well, we'll have to do it then. What can we do?
The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of this year and 3.1% at the end of next year, unchanged from December. As is always the case, these individual forecasts are subject to uncertainty, and they are not a committee plan or decision. Monetary policy is not on a preset course.
Selling off.
Decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people.
Okay.
Thank you, and I look forward to your questions.
Okay.
Thank you. Colby Smith of the New York Times. There's been some debate about whether the Fed should look through the inflation that will come from higher oil prices stemming from the Middle East conflict. Is that the right approach at this juncture? And to what extent does the fact that inflation has been above target for roughly 5 years now influence the committee's thinking around this?
So, first, let me say we're well aware of the performance of inflation over the last few years and how a series of shocks have interrupted progress that we've made over time. And that happened most recently with tariffs, and now there will be some effects on inflation coming forward. The thing that's really important that we see this year is progress on inflation through a reduction in goods inflation, as the one-time effects on prices of tariffs go through the system, go through the economy. That's the main thing we're looking for going into this exercise. And we need to be seeing that to sort of understand that we actually are making progress, because on net, we didn't make progress. And if you look at total core inflation, it's about 3%. And some big chunk of that, between 1/2 and 3/4, is actually tariffs. So we're looking for progress on that. The question of whether we look through...
What kind of fucking answer is that, J. Powell?
Inflation doesn't really...
There is no inflation. He goes, what the fuck are these people talking about, man?
Of course, is kind of standard learning that you look...
Do these people go buy shit?
That's always been dependent...
Do they go buy food? Do they go buy gas? Do they... Healthcare premiums, auto insurance premiums? I mean... What are these people talking about? How detached from reality are these fucking people? What the fuck?
Can you help us make sense of why there is still a bias to cut for most officials this year?
What the F? I don't understand, man. If you guys are paying any less for your water and power, utilities, your school, your healthcare insurance, your car insurance, your maintenance on your car, has your W-2, your earnings kept pace with inflation? Has it over the last 5 years? And then these people are still saying 3%, 2.6%. What are they talking about? Seriously, man.
And each person has individual, stories behind what they want to do. But essentially, it is that the forecast
back to 120. God dang it, from 117 to 120.
Some progress on inflation. It should come as we start to see in the middle of the year. Progress on tariffs, going through once and then the tariff inflation coming down. We should be seeing that. And the rate forecast is conditional on the performance of the economy. So if we don't see that progress, then you won't see the rate cut.
Well, you can't be talking about that, J. Powell.
Thank you, Howard.
Because you're not going to be around.
Just to follow a little bit and to be clear, is the higher inflation penciled in here for 2026 solely the result of the oil shock or something else?
So that's going to be part of it. But, that wouldn't be most of core, right? So the oil shock for sure shows up here. Some of that will be in core as well. But yes, but no, there's also just the feeling that we haven't seen, the progress that we had hoped for on core goods and on tariffs and on the rest of it. So for whatever reason, people did write up their inflation forecast.
Yeah, but
just a question of how long it takes for them to get all the way through the economy. It just takes some time.
And is the lack of change in the SEPs, again, just to explicate this a little bit, more due to the expectation that the oil portion of this will pass through, or more out of concern that there is a potential blow to consumption and growth coming in the form of wealth effects with the stock market down, in the form of gas prices, diverting spending from other parts of the economy?
So I didn't get the second part of your question.
Well, the consumer is going to be potentially diverting money to gasoline from other parts of the economy. There could be a growth shock or a redistribution of spending there that can hit consumption, wealth effects as well. I guess I'm wondering, is the rate forecast not changing because you think the oil shock is going to be temporary, or because you want to be sure you're positioned in case growth starts to slow?
So the thing I really want to emphasize is that nobody knows. The economics effect could be bigger, that could be smaller, that could be much smaller or much bigger. We just don't know. So people write it down.
That's confidence right there. We just don't know. Well, actually, he's being honest. I don't think anybody knows. I don't think anybody knows. I don't know. But then there are a lot of fools on social media go, I know what's going to happen. You don't know shit. Nobody knows what's going to happen to the markets the next minute, let alone next month, or the economy, or the macro. Jesus. Just trade what's in front of you, man. If you're given a trade, do it. Echo, come on now. Patience. One more dollar. This is how patient I am. Yeah, this is how patient I am, folks. Get my price or no price. Ooh, silver selling off. We may be getting called away on ZSL, which is fine. Finally, after 3 months of BMNU, I think I can get out with my head. This should look, that's looking okay. Perfect, right at 95. Perfect. All right, I'm gonna go have a cup of coffee because this is a bunch of bullshit. Nothing's going on. So, goodbye, J Pal. Have a nice day. Fuck off. There we go. So let's go answer some questions if there's any questions. All right, JC Y2DK AG versus I like AG a little bit better. Both I like. I mean, I like EXK, AG. Yeah, you have to look into fundamentally a little bit, like what their cost basis is for every ounce of silver and gold they're mining. It is, I'm sure they have hedged fully at the very high levels. So they're printing money, these companies. Cash flow is going to be solid. It's a trade, but I don't think silver and gold are finished going down. If inflation comes back, I think they're just testing the lower end of the trading range. And it's just a trade that we're putting on for April. And this is how you're going to protect. Yeah. Well, also, I mean, it's a defined risk trade from the get-go. Number one, right? It's a call credit spread. It's not a naked call selling, right? No, AG a little bit better support at 20. Same thing on HL, really. You can't really tell. When the market's this wild, chopsticks, I call it, technicals are out of the window, but then you still pay attention to like 200 EMAs and things like that. That's why I'm waiting on AGCO to put the position on at 200 EMA. 200 EMA is pretty solid wall on most stocks. So when they get there, I execute. Otherwise, I wait. I got to wait. And no rush. Markets open every day. Yeah, you could. I could. But I mean, I don't know exactly where the top is going to be, where the bottom is going to be. But if I leg into an iron condor, it's not because I have no confidence in my selling the call credit spread first. Even if oil pulls back, I think ExxonMobil will be like, let's say, in a range of 140 to 160, and that's plenty of time for decay. So we're just playing for decay at the moment. Directional bets are really difficult when VIX is this high. So I guess your max loss will then be 2.5 or 2. Yeah. So if you put if you sell a call credit spread or a put credit spread with the 5 wide, and you take in 2.5, for example, I didn't. I took in 2, but let's see, consider that position. If I took in 2, my max loss is 5. Stock will go to 260. Not going to make any difference to me. And my max loss is going to be 5, right? So that's the wing width. So if I took in 2, my max loss is going to be 3, right? I took in 2 credit already. That's the way I look at these things. And there's rules of thumb. Like if the long end gets challenged, you need to either roll or take the L. But more importantly, so if I sold them at 2, and if they get to 260, 265, 270, 30%, I will take that. But I will also take on the other side a 60% gain. So you got to money manage, not only according to the price of the stock, but you got to according to the price of the premium you took in. If I took in 2 and the position goes against me, and it's now both sides are in the money, and by expiration, right, the call credit spread is going to be fully max loss. Why wait? Take your little L before it becomes a big L. So take your lowercase L before it becomes a capital L, and then I don't like rolling because I'm doing it at a point that I think there's going to be resistance or some sort of topping, if not topping action, kind of sideways action, which will help me. But I am also not fool enough to say, well, I'll just wait. Let's see what happens. Because that's why a lot of fools lose their bank. They go, let's see what happens. Oh, it'll come back and save me. I'm like, no, bro, it's not going to come back and save you. I'd rather take 2 small L's than 1 big L that's going to wipe you out. Because there's plenty of money to be made, So, but anyway, hopefully I answered the questions. So I'll be back on Friday with Power Hour with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. Sorry about the cutting off. So if you're not subscribed, please put a thumbs up. Please subscribe. Channel is growing. Thank you for the support. And all I'm doing is just putting information out there. Again, none of this is trading, financial, or investment advice. Don't follow me. Do your own due diligence. And what I do is risky. It depends on your account size, your risk tolerance, your knowledge, your experience. And also, more importantly, don't listen to anybody on X because they're a bunch of fucking idiots. Okay? And because there's just one trick ponies. I'll just sell cash secured put. I get assigned and I sell a call. I'm like, where is that going to get you? When the stock is going down 50%, how are you going to figure all that out? Like, how's that going to save anything? Right? Because these are all bull market babies for the last 3.5 years, right? Stocks go higher highs, higher lows. I sell the put. If I get assigned, I sell the aggressive call. I get called away. I wheel. I'm like, you go ahead and wheel in a bear market. Let's see where you're going to end up. But then certain stocks have been in their own bear markets. For example, SoFi. For example, Hood. For example, I don't know. There's so many. They're correcting, right? 30, 40, 50%, or IRENs, or Oklo, or CIFR, or MARA, or let's not talk about BMNR, and like, where would you be if you're just wheeling on BMNR? Huh? Where would you be? Nowhere, but in the poorhouse. So to me, it's like, I do what I do. I'm comfortable doing what I'm doing, but my risk tolerance is different than others, and others' risk tolerance is different than mine. So with that said, thumbs up, put a like, it's free. And last but not least, go check out my website, www.sergioavadian.com. There's a free newsletter that goes out every Monday around noon Pacific. Really good information there. We have other things that are coming up over the next 3 weeks. And so thank you for the support. It looks like not much is going to happen today. I'll stick around. We have about an hour and 10 minutes to go. We'll see. We'll see how it goes. We're just waiting. Couple more days to expiration. And everything is lining up reasonably well so far. So with that said, have a great day. I'll see you guys on Friday.